Hello and welcome to the Weekly Outlook. Next week on the calendar, we've got a bit more of an interesting week, a bit more exciting. Quite a few different alerts happening relevant to different currency pairs. So we'll go through from starting from Monday evening, where we've got RBNZ Governor Wheeler speaking. Now, obviously, we had a rate cut from New Zealand, the RBNZ, last week on Wednesday evening, which caused quite a drop against the US dollar and against other major currency pairs. Now, it did pull back considerably, almost to the same price of where the announcement took place, but we are seeing rejection from this previous area of support here at the moment. And Governor Wheeler, the RBN said want to try and keep a lower currency for their export industry, which helps their GDP. So it's important that they try and keep that currency as low as possible, and their fair price really is about 60 cents to the dollar. At the moment, we're about 700 pips above that price. So it's likely that Governor Wheeler will try and talk the currency down, using language to try and devalue the currency, saying that it's overvalued. So we can expect, if that happens, that the New Zealand dollar will fall further. So we are looking to resell this on the Monday evening. Okay, so that's the first one. Next, we've got Australian dollar. We've got the monetary policy meeting minutes. Now, things in Australia have been looking quite good. The economy is growing. Their inflation is up to 1.6%, which is quite an increase over the last few months. So their monetary policy is expected to be fairly neutral to hawkish. And looking at the Australian dollar as it is at the moment, it has been having a nice rally against the US, and it's likely to continue into next week, especially with that data coming out. So later on in the week as well, we've also got on the Australian dollar, which is going to support that pair, is we've got the employment change and unemployment rate. Now, the employment change is expected to increase, and the unemployment rate is expected to stay steady. If there's any change there, it could have an effect. But as it stands at the moment, I think we're looking for a continued sort of bullish bias on this. Looking to trade it is a little bit difficult because obviously the US dollar is a fairly neutral currency, the Australian dollar is fairly neutral at the moment. But going into later on in the week, sort of Tuesday, we've got PPI retail sales due out on the US dollar, which is expected to be slightly weaker. And also later on, we've got CPI and core CPI month on month. That's also expected to fall on the US dollar. So this really could be the beginning of a new rally for the Australian dollar. If we look at bigger time frames here, we can see that we are still fairly low, even though we've had quite a significant pullback of late. But we have broken above this area of resistance around about that 7,380. Now we have got a little bit of a support area here, which could turn resistance early in the week. But I expect by those figures starts coming from the US dollar that the Australian will be one of the main beneficiaries of that currency pair. Okay, so the other currencies we've got in focus. We've got Japanese yen monetary policy statement. Obviously, they're trying to keep their currency weak at the moment as well. It has strengthened quite a bit against the US dollar of late. Now, we do expect this in the long term to come down to about the 100 level. Now, that is a concern for the Japanese yen because obviously export as well is a big part of their industry, and they want to try and keep their currency weak as well against the US dollar. And the weak currency that we've had so far has been of benefit to the Japanese economy, so they want to try and keep that ball rolling if they can. It is struggling quite a lot to get through this 114 area, and it is becoming a little bit of a problem. But I think once it breaks, we will see a return to these higher levels of 117. So that monetary policy meeting on Tuesday morning could very well be the catalyst for that break. Okay. Moving on to Wednesday, we've got the pound back in focus with average hourly earnings, the claimant count change. So let's have a look at that. We've had quite a good rally on the pound of late. It did break through this area where we were looking to resell it. It broke through there and taken out the stop zone. It continued to rally. It's a 144. Is this the beginning of something bigger? Well, it could well be, but we have got that referendum looming in the background at the moment, coming up in June, which is sure to pressure the pound. In the short term, we could see a further rally. That average hourly earnings is expected to slightly increase. The claimant count change is expected to slightly drop. And then moving on later on in the week, I think it's Thursday, we've got the monetary policy summary, the MPC official bank rate votes, and official bank rate as well. None of those are expected to change too much. It's really the monetary policy summary which we're going to be listening to and seeing whether we've got hawkish or dovish comments coming from the BOE, the Bank of England. So I think in the short term we could be looking at a further up move, but I think it's probably going to be limited to the sort of 1.4, certainly the 1.5 area until that referendum's out of the way, and then we're going to be looking for a more of a sustained rally after that period, but we've got a way to go there on that. Okay, the biggest meeting we've got this week is going to be the federal funds rate, the FOMC press conference. Now, this could change things a little bit. We could get a little bit of a sort of whipsawing action happening on the US dollar next week with the CPI figures, the retail sales, and then the FOMC statement and federal funds rate. Federal funds rate is not expected to be changed at the moment. They are in this rate hiking cycle, but it's not expected to do another rate hike until June, July. However, the FOMC statement could be either hawkish or dovish. It depends really how they're going to interpret the data that's been coming out of late. Things haven't been too bad. The non-farm payrolls was okay last time. I think they're probably going to be a little bit concerned about inflation and how that's going to affect, and this CPI month on month could be a bit more of a teller on that, and I think we're going to get a little bit of sort of a lot of volatility during this meeting, but I think it probably will end up returning to the same price it launches from. So I would probably stay out of trades at this time, certainly US dollar trades anyway, just until after that meeting. We then got New Zealand dollar GDP quarter on quarter, again expected to come in weaker. So the pressure really is on New Zealand dollar, I think, to weaken off next week. So it's going to be one of the primary sort of trade currencies that I'm going to be looking to trade. Later on Thursday, we've got the Swiss SNB monetary policy assessment and their Libor rate, not expected to change there, but the Swiss monetary policy, they're always quite cagey about it, but again, works in correlation with the euro quite significantly, and I think we would be looking for anytime it drops below this 10,000 level, this parity level, that we're going to be looking to rebuy it back up to that price. This is really the fair price for it against the US dollar at the moment. So looking for rebuys, but as it's dropped significantly, and then looking to resell it back down to parity when it gets too far up there. Again, moving on, the Canadian dollar has been strengthening quite a bit, and then on Friday we've got the US dollar Canadian CPI and core retail sales. Both of those figures are expected to be better, and we have had quite a significant rally on the Canadian, strengthening against the US of late. As you can see, we've had this huge pullback from this 146 area. I expect this to continue to 1.3 at least, as you can see there, this trading plan that's already marked out, possibly even 1.2. So again, if the figures come in good for that, but I'll be looking to trade into that event. Possibly, it depends if we're going to get a pullback on this current situation. At the moment, we are already sort of quite low down. We'd not need to get where we've been having this nice stepping motion. We need to see another one of those steps back up, possibly to the 133 area, where we can look to resell and get on board with the bears here. Okay, so that's about it. There's quite a lot to look out for. The main currency pairs are going to be looking at is the pound, the New Zealand dollar, the US dollar, and the Canadian. Obviously, we did have the ECB press conference last week, which threw a bit of a spanner in the works. We had a big pullback from the euro, but I would say this is very overvalued at the moment, and I'm currently looking for reselling positions on this as well. So a break below the pivot point, 11074 possibly, or with stop losses above the 112 area, 11220. Okay, thanks for watching, and I hope you can make some pips.